It's the end of a fantastic year in the market. However, I think the market's getting a little greedy here. Let's take a look in the weekend review.
Okay, so let's talk about the market. If you look here, this is how we've been looking at the market pretty much since we started the channel. This is the S&P 500 here in red and the 200-day moving average here in purple. Here was our previous testing phase, which was resolved successfully. And since then, we've been on all-time high watch, and we are certainly there now. We are less than 1% away from an all-time closing high. During the day, we get pretty close to an intraday all-time high. Things are great in the market. So everything's good, right? Well, not so fast. Remember, part of my job is when the market is really bad, I'm here to tell you things will get better. And then when the market is really good, I'm here to tell you, hey, let's be a little cautious. So here's the NAAIM exposure index. Basically, this is the National Association of Active Investment Managers, AKA people like me, active managers who, report on their positions. And they tell us every week how exposed or not exposed they are. So the way that you read this, it reads almost perfectly literally. So 0% means we've got no stock market exposure, 100% means we're fully pushed into the market, and over 100% means that we're actually leveraged into the market, meaning that on average, active investment managers are borrowing money to buy stocks that they don't yet actually own. And so if you look here where we are in December, you can see that we have the most exposure of, basically all year. And you can see that, this tends to be a pretty noisy data point. Active investment managers, they greatly change their allocations. But here's the most important point, I think, and this is what I'm looking at. If you look at these active exposures, what I can tell you is the market doesn't last long above 100% exposure. So if you're thinking about things like, I wonder how much cash there is on the sidelines, I wonder how much risk other investment managers are taking, this tells us that not only is everybody in the market, but on average, we're actually leveraged into the market. And we know that that typically doesn't last too long. And previously, when we have seen conditions like this, it's typically told us that, yeah, a correction is coming. Here's mid-2018, right before the fourth quarter. Through 2020, things were pretty spicy all the way through, but obviously this was, building a stock market bubble. But then as we started to get towards later 2021, you can see there was another peak here over 100. So what this tells me is the market's doing great. I've got nothing bad to say about the market. There's nothing that I see out there, that has me nervous right now. But if we were to get a correction, a 5 to 10% correction, I wouldn't be surprised. And in fact, we're probably, as of right now, already due for one. But as this market continues to go higher, as people continue to raise their exposure, it's just going to increase the chances that we get one. So stay on guard. But everything's great. It's been a great year. So don't let me ruin your holiday. There you go. That's the market. We'll see you soon. Bye.